You are welcome to Explains 102, where financial tips are made simple. There was a young man named David who had just landed his first professional job after graduating from university. Like many young people, he was excited about earning his own income and becoming financially independent. He had dreams of dressing well, driving a nice car someday, traveling, and enjoying the lifestyle he had always imagined. A few months into his new job, David received an email from his bank. It congratulated him on being approved for his first credit card. The message explained that he now had access to a spending limit that would allow him to buy what he needed and pay later. David was thrilled. To him, it felt like someone had just given him extra money. He activated the card immediately. At first, he used it for small purchases: a new pair of shoes, dinner at a restaurant, and a few online subscriptions. Since he didn't have to pay the full amount immediately, everything seemed easy. As the weeks passed, David became more confident. Whenever he saw something he liked, he simply reached for his credit card. A new smartphone, a designer watch, weekend outings with friends, flight tickets for a short vacation. Every purchase felt harmless because all he had to do was make a small monthly payment. He often told himself, "I'll pay it off later. After all, I'm earning a salary every month." Months went by, and David hardly thought about how much he was spending. Then one evening, he opened his monthly credit card statement. He expected to see a manageable balance. Instead, he stared at the screen in disbelief. The amount he owed was far higher than he imagined. There were interest charges, late fees, additional costs he had never noticed before. Even though he had been making the minimum payments every month, his debt had barely reduced. In fact, it seemed to be growing. David couldn't understand it. "I've been paying every month," he said to himself. "Why do I still owe so much?" The stress began to affect him. Part of his salary now went toward paying credit card debt instead of helping him build savings or invest in his future. He started avoiding calls from the bank. He postponed other financial goals because so much of his income was tied up in repayments. One weekend, David visited his older brother and shared his frustration. After listening carefully, his brother smiled and asked a simple question. "David, before you started using your credit card, did you take time to understand how it actually works?" David lowered his head. The truth was, he hadn't. He knew how to swipe the card. He knew how to shop with it. But he had never taken the time to understand interest charges, repayment terms, or the consequences of carrying debt from one month to another. His brother looked at him and said, "A credit card is one of the most useful financial tools in the world. Millions of responsible people use one every day without getting into debt. But for those who don't understand how it works, the same card can become one of the fastest ways to create financial problems." David sat quietly. For the first time, he realized that the credit card itself wasn't the problem. Perhaps the real problem was the mistakes he had been making from the very beginning. So what were those mistakes? Why do some people use credit cards to build a strong financial reputation, while others become trapped in years of debt? That is exactly what we're going to uncover in today's lesson. David's brother placed the credit card on the table and said, "David, the problem isn't that you own a credit card. The problem is that you never learned how to use it." That statement surprised David. Like many people, he had assumed that a credit card was simply another way to pay for things. He never stopped to think that using it incorrectly could have long-term financial consequences. The first mistake David made was treating his credit card like free money. Every time he swiped the card, it felt as though he wasn't spending his own money because no cash was leaving his pocket immediately. But a credit card is not free money. It is borrowed money. Every purchase you make is a promise that you will repay the lender. If you fail to repay it on time, the cost of that purchase becomes much higher because interest begins to accumulate. The second mistake was spending more than he could comfortably repay. David bought things based on the amount of credit available instead of the amount of money he actually had. Many people make this mistake. They assume that because the bank approves a certain credit limit, they can afford to spend it all. In reality, your spending should be based on your income and your ability to repay the balance, not on the limit printed on your card. Another costly mistake was paying only the minimum payment each month. David believed he was doing the right thing because the bank accepted his minimum payment. What he didn't realize was that while the minimum payment kept his account active, most of the remaining balance continued attracting interest. As a result, his debt reduced very slowly while the total amount he owed continued to grow. His brother explained, "Paying only the minimum may keep you out of immediate trouble, but it can keep you in debt for a very long time." David also made the mistake of missing payment deadlines. Sometimes he forgot the due date, while other times he delayed payment because he wanted to use his salary for other expenses first. Each late payment resulted in additional charges, and in many countries, repeated late payments can also damage your credit history, making it more difficult to obtain loans or better financial opportunities in the future. Another mistake was ignoring the interest rate and other fees attached to the card. When David applied for the credit card, he was excited about the spending limit but never bothered to read the terms and conditions. He never asked how much interest would be charged if he failed to pay the full balance or what penalties applied to late payments. Many people focus on the benefits of owning a credit card but ignore the cost of using it irresponsibly. David also came dangerously close to maxing out his credit limit. As his balance increased, the amount of available credit became smaller and smaller. Instead of seeing this as a warning sign, he continued spending until he had very little credit left. Maxing out a credit card not only increases financial pressure, but can also negatively affect your credit score. His brother then asked another important question. "Before you started using your credit card, did you have a budget?" David shook his head. He simply spent whenever he felt like buying something. Without a budget, there was no limit to his spending. A budget acts like a financial roadmap. It tells you what you can afford and what should wait. Without one, it becomes easy to lose control of your finances. Another mistake was depending on the credit card for everyday living expenses. Instead of using his salary to cover basic needs and using the credit card responsibly, David gradually relied on borrowed money for groceries, entertainment, transportation, and other regular expenses. This created a dangerous cycle because he was financing today's lifestyle with tomorrow's income. Finally, David admitted that he rarely looked carefully at his monthly credit card statements. He only checked the total amount due. He never reviewed individual transactions, interest charges, or additional fees. Had he examined his statements regularly, he would have noticed much earlier how quickly his debt was increasing and could have corrected his mistakes before they became serious. His brother smiled and concluded, "David, remember this for the rest of your life. A credit card is neither your friend nor your enemy. It is simply a financial tool. Whether it helps you or hurts you depends entirely on how you use it. A hammer can build a house or break a window. The tool is the same, the outcome depends on the person using it." At that moment, David realized that the credit card had never caused his financial problems. His lack of knowledge and discipline had. David's experience teaches us that a credit card is not something to fear, nor is it something to misuse. Like every financial tool, its value depends on the knowledge and discipline of the person using it. The good news is that the mistakes David made are completely avoidable if you develop the right financial habits. The first practical lesson is to use your credit card only for purchases you can afford to repay. Before swiping your card, ask yourself one simple question. If this bill arrived today, could I pay it in full? If the answer is no, it is usually wiser to postpone the purchase. A credit card should never be used to buy a lifestyle that your income cannot support. The second lesson is to pay your balance in full whenever possible. This is one of the smartest habits of financially responsible credit card users. By paying the full balance before interest is charged, you enjoy the convenience of the card without allowing debt to accumulate. The less interest you pay, the more money remains available for saving, investing, and achieving your financial goals. Another important lesson is to make every payment on time. Set reminders on your phone or enable automatic payments if they are available. Paying on time helps you avoid unnecessary penalties and, in many countries, protects your credit history, making it easier to qualify for loans, mortgages, or better financial opportunities in the future. You should also develop the habit of reviewing your monthly credit card statement. Do not simply look at the total amount due. Carefully examine every transaction, every fee, and every interest charge. This helps you understand your spending habits, detect possible errors or fraudulent transactions, and identify areas where you can improve your financial discipline. Another valuable lesson is to use a budget before you use your credit card. A budget tells your money where to go before you begin spending it. It prevents emotional purchases and helps you distinguish between genuine needs and temporary wants. Never allow your credit card to make financial decisions for you. Let your budget make those decisions first. Most importantly, remember that a credit card should support your financial plan, not replace it. It should be a convenient method of payment, not a source of extra income. Borrowing should never become a substitute for earning, saving, and planning wisely. As we conclude, remember this: the biggest credit card mistake is not owning a credit card, it is using one without understanding how it works. When used responsibly, a credit card can be a helpful financial tool. When used carelessly, it can become an expensive burden. Knowledge is your greatest protection against debt. The more you understand how financial tools work, the better equipped you are to make wise decisions that protect your future. If you found this lesson helpful, subscribe to Explains 102, where financial tips are made simple. Join us as we continue to learn how money works, avoid costly financial mistakes, and build a future of financial wisdom and lasting wealth. Remember, every smart financial decision you make today brings you one step closer to financial freedom.